Hello, everybody. I have a cough. I'm a little under the weather, so forgive me for sounding even shittier than usual. I wanted to do this YouTube because I have an actual idea, I think, that could be resolved in the next few weeks to next couple months. Um, it's DCP, which is a MLP, so you'll have some funky taxes, just so you know, with K1s. The story's pretty simple. It's very, very similar to SHLX. So for anybody that's been watching the YouTubes for a while, you'll remember SHLX from last summer, or really from February, March. And it got resolved in July. And the thesis there, the thesis here, is that a large parent company makes a bid to buy out the minority of an MLP, and they make the bid at last sale, and then they negotiate with the independent committee, and they end up paying a premium to last sale for the company. I am not aware of any transaction that has not occurred in the greater than $1 billion market cap range once an initial bid is made. So there's been maybe half a dozen or a dozen of them, and they've all eventually gone through. So it's very unlikely that the special committee and the PSX, excuse me. Let's go. It's very unlikely that the special committee and PSX won't come to an agreement. So your then question is, what are your risks in the meantime that can maybe make PSX walk? How much longer will it take? And what do I think the price will be? Why don't we start with what I think the price will be? So if you look back at comparable premiums for deals like this, whether it's SHLX or a BPMP, I believe, I talked about all of these in my SHLX YouTube, which you can go back and listen to. You can find them on here. And the premiums usually are anywhere between 15 and 25% from where there was trading beforehand. And in that scenario, that would get us to, I don't know, I think it's like between $40 and $45 a share versus the $38.50 it's trading at today. You'll also get a dividend of, I think, 38 cents in the middle of January. What's more interesting about this one is that on the same day that PSX announced that they wanted to buy out the minority, they took out a large stake from their partner, which owned, think of it as like three groups of owners. PSX, they have another publicly traded partner. I forget the name of the company, Enbridge, I think. And then DCP limited partners, shareholders. When they took out the stake from the partner, it was very opaque about how they said they valued that stake. Basically, they got some cash and they swapped some assets, and they made it seem like the assets were worth, amazingly, the exact same price as last sale or something around it. It's my belief that that's not true, that those assets are worth substantially more. And the special committee now has an anchor to say, you just did an arm's length transaction with this company. This is what you paid for this asset on that day, the day you said you want to buy it, the rest of it. And we can just spend the next few months independently coming up with what we think that asset is worth and what the true transaction price was. And you should pay that for the rest of the independent shareholders. So that's all fine and dandy. What are your real risks here? I'll test out the reasons why I really like it, but what are your real risks here from an operational standpoint? I think what DCP does is NGL transportation, which is, some function of natural gas. And it's my understanding, if you read the last two transcripts, so you want to read first the conference call, the PSX conference call from November, and then you want to read the PSX Investor Day from November. The Investor Day transcript is on their website, and the conference call transcript is wherever you get your transcripts. I get it at Seeking Alpha. I get the impression that the DCP business is going to surge in the coming years. And you'll have hedges that reset, and the company is banking on this consolidated entity to kind of lead its growth over the next 2 to 3 years. PSX is a big company, okay? It's a market cap of, I think, about 50 billion. And it was trading about $85 a share when they made this initial bid. It is now trading at $103 a share. So up whatever, 15, 18%. Now, it isn't up because DCP is doing so much better. It is obviously a diversified business, and DCP is just a small part of it. The negative to this story is that they will need upwards of $5 billion, let's say, to take out the minority in DCP. 4 billion, 5 billion, something like that. That's not a rounding error to a $50 billion company. But a way to look at it a little bit more roundier is a 20% premium from here would only amount to about $800 million extra cost on the $50 billion company. What's interesting to me is the three things that I think that made me buy it. So, or 4 things. It's been 4 months and a week since they made their initial bid. It took SHLX about 5 months and a week, or 5 months and 2 weeks to get their deal done. Oops, this is making a lot of noise. I'll close this. And it's taken anywhere between 3 months and 4 months for the other one to get done. One took 9 months, I believe, and that was PSX2, and that one got the biggest premium. So of the 4 or 5 that have happened in the last 2 years, there's almost a perfect correlation between how fast the deal gets done and what the premium is. The longer it goes, it's clear that the independent committee is fighting for you. Now, the 3 things that I really like about this are in reverse order. Last week, there was an AK that said that the CEO and the CFO have both resigned. Their last day is December 31st, and they'll be getting full severance. Okay. I don't think the CEO and CFO are resigning if DCP is not going to be fully consolidated with the parent company. And if there was a problem with their performance, they would have been fired that day. They wouldn't have been kept around for 3 more weeks. And the way that the verbiage was in the 8K was that they were thankful for their service and, they respected them or whatever. To me, that means we're pretty close to this being over. Now, I asked myself, why wouldn't they have fired them the same day they announced the deal? My answer to that is probably twofold. One, they don't think they're going to get done in December, and maybe they'll let this slip to January. And for tax purposes, whatever, these guys wanted to have their last day December 31st. The second reason can be is that it's kind of weird to fire your executives the same day you announce a minority takeout. So they do that then, and then the next week or two, they announce the takeout. I'm not really overly concerned about it because if the deal was busted, they would have announced that it was busted when they fired the executives. Like I said, it's extraordinarily rare for something like this to bust. If it did break, it's my belief the only reason why it would break would be that the minority independent shareholders fought for us, and it's worth way more than it's trading at right now. And that to me gives me that makes my break price, I would think, no greater than 33 versus the 38.50 it's trading at now. And my upside, like I said, is as much as 45. And I probably put a 95% confidence level that it goes for somewhere between 40 and 45. And I think my timing is in the next 6 weeks. Now, if you read the transcripts that I talked about, first the conference call from early November, and then the transcript from Investor Day, to me, it seems like they're almost talking in uncertainty that the transaction will occur. In the conference call in November, he says, and I quote something like, "It's more important to get the right price than to get it fast." In the conference call in the middle of November for the Investor Day, they were very cagey about talking about the synergies they'll achieve once they take this out. Now, there was a sell-side dinner last week on Tuesday, and 2 analysts published from this sell-side dinner. One said that they believe, or the management said they believe a DCP deal is getting close. That's in the sell side note. And then 2, another guy says he thinks it's going to happen by the end of the year or around year end, and estimates as much as $300 million in synergies to the parent company once it's consolidated. Now, you could put a 10 multiple on the $300 million of synergies, and clearly you could pay a 20% premium and create billions of value. So my guess is the independent committee is fighting hard for a good price. They'll get their good price. And this is, like I said, SHLX part 2. The thing I like the most about it is that 4 months have already passed, as opposed to me sitting around and owning it since August. I was able to enter now. So I made it a big position, and nothing really would shake me from it outside of them announcing that they've hit a stalemate and they're moving on. But I just don't see that happening. And yeah, so that's the deal. If you have any questions, shoot them at me. Regarding ARDX, that one threw me for a loop. They, instead of the FDA coming back to them in 30 days, they summoned them, and the head of the division, not the division, the boss on top of the division, Stein, had a productive meeting with them and said, we'll get back to you. We'll get back to you in the next few weeks with our decision. So you have to think that the worst case outcome is off the table, which would be you have to run new trials. I don't know what that means for the 2-month outcome. Clearly, we know that the division does not want to approve this or wants to make it difficult to approve. They've already rejected it. So I have no idea what happens here. I took off my 23 call spreads, and I have on only my 24 call spreads. I have about 300 basis points of exposure, and they go up 4 to 5x if the stock gets to $5 by January 24. I'm covered in all outcomes there as long as it gets approved next year. I even think I'm covered in a sale. If it gets approved, by the fall, they could sell the company by January of 24. So, I don't know what's going to happen there. And I'm excited to see what happens there. Gary, he resigned from the board immediately, but his last day at the company is December 31st for both of them. Did you see this in the press release, and why? And what do you think the significance is? Oh, yeah, no, I don't. I think he left the board because he wasn't part of the independent. He's not independent, so he's not part of the negotiations with the parent company. So there's no actual effect of him being on the board or not being on the board. Look, my first reaction when I saw it, I was scared. I was like, why are these guys leaving now? Shouldn't they wait till this deal's done? But then my follow-through reaction was, this is actually pretty bullish. They're just saving money. They're going to fire these 2 guys, save them a few $1 million a year, have somebody else run the business when they consolidate it. And, the consolidation is going to happen shortly. These independent boards don't ever really just say no. Go read the proxies. Sorry, hold on. Come on. Come on. It's pretty fascinating. If you go read the proxy for BPMP and for, what are the other ones? I'll tell you the other names for you guys to check out. Again, I talked about all this in SHLX. Read the SHLX proxy. I think that one is very interesting because I was involved in it. Hold on. BFX and PBF, and finally NBLX and CVX. So BPMP and NBLX both had a 13 to 14% premium. For here, I think that would get you to like, what was the price when they did it? And the other one that PSX bought was PSXP. That had a 29% premium. So from 34.75 times 1.14, you get to 39.60. And if you add the dividend, you get to 40. So look, making $1.50 on 38, 50 for, 6 weeks or 4 weeks or 3 weeks, the spread will trade it very, very tight in this kind of market is, very attractive. And yeah, I like it a lot. Thanks. Do you know if an activist involved behind the scenes like there was an estimation? Great question, Gary. I do not. It's a much bigger company. The fact it's taken over 4 months already would lead me to believe they're probably doing the same thing like they did with SHLX. It's all about how long it takes. And the longer it takes, the more they're clearly in contentious discussions. Oh, the other thing I really like about DCP is go look at the chart since they announced this. The thing has basically been stuck between 38 and 39 for 4 months. So you have a very stable reference price, and they know what they need to kind of beat, what kind of bogey they need to beat to please shareholders at this point. And my guess is a 10 to 15% premium from this level. So another $4 or so would do it. And I think the company would do really well getting the company at that price. LGF had a CFO buy some stock today. Yippee-yi-yay. That's why that's up. I'll take it, whatever it takes, right? With Ocular, I see that's down today, which is really surprising given XBI is so strong. I emailed the CEO and told him I built a pretty substantial position, and I was very impressed with his roundtable fireside discussions the last 2 times, and I expect him to kind of stick to his word that he said. And his reply back was, thanks for listening to the conversations. And basically, I'm a man that, keeps my word. I've always kept my word. At my time here at Ocular. And I was really reassured by that. I think he knows what his options are. And I don't think that they would be this confident that they can get non-dilutive funding and talking about it publicly if they didn't already have a path to do that. So Ocular remains, one of my most exciting names for next year. Yeah, I like it a lot. And AMPY, I like AMPY a lot. And I like Magnachip a lot. Those are my favorite names for next year. Lionsgate, Magnachip, DCP short term. I think Unicure, QURE, is going to have a huge year, depending on what the Huntington's data is. Very, very risky. And OCUO, Haku. Meanwhile, IMVT is 17, and I'm mostly out of it. I've sold most of my 23 spreads. I still have all my 24 spreads, but they're all in the money now, which is just nuts. And didn't see that coming. I still own IAC. I still own AYX. They're smaller positions. I don't see any near catalysts for IAC. And for AYX, I think that can be taken out next year, especially after you see what happened with COUP. Are you taking the Twitter CEO position? I can't think of anything that would be more rewarding than working for Elon Musk and spending my time answering to him. But no, he hasn't called me yet, unfortunately for me. I'm so critical of him on Twitter. I think at some point I'll get banned, and the only way the guys will hear from me is YouTube. I think that's pretty much it, guys. I wish you guys a happy New Year, Merry Christmas, a happy Hanukkah. NCR Glenn is benefiting from FX rates reversing, and they're susceptible to an economic slowdown, of course. But I still feel really strongly that gets sold next year, somewhere between $35 and $45 a share. I think the odds of an actual split is low, and if they do the split, that's fine. Then the individual entities will be sold after that. But I'm a big fan of NCR. That remains one of my biggest positions. I have not taken off anything there. In fact, that's my 4th biggest position after Lionsgate, then DCP, then MX, then NCR. And the other ones are like 10 to 15% kind of positions. Ocular, AMPY, Cure, AYX, BSM, things like that. Happy Kwanzaa, Michael. All right. Short and sweet. Peace. Have a great day, guys. Let's hope we end the day still making some money. Take care, guys.